The latest news from Silicon Valley Bank is shocking. This is financial history that was made on March 10th, 2023. Silicon Valley Bank collapsed due to a bank run and capital crisis, making it the second largest financial institution failure in US history. What? It's massive. The California regulators closed down the bank and placed it under control of the FDIC, which will liquidate the bank's assets and pay it back to the customers, including depositors and creditors. The bank had failed to raise over $2.25 billion in new shares to shore up its balance sheet, and after it announced that it had sold a bunch of its securities at a loss, well, panic followed among key venture capital firms who reportedly advised companies to withdraw their money from the bank. This led to a classic bank run that caused the FDIC to take over. The FDIC is actually acting as a receiver and will liquidate the bank's assets, so hey, it can pay back its customers, right? The SVB had over $209 billion in total assets at the end of last year. Listen, this is the largest lender to fail since Washington Mutual collapsed back in 2008. Despite this initial panic on Wall Street over the SVB, which caused shareholders to crater, analysts actually say that the bank's collapse is unlikely to set off this domino effect that gripped the banking industry back in the financial crisis. However, while big banks on Wall Street are recovering from it, mid-sized banks and those focused on the type of customer that have suffered a greater turmoil. So, what does this mean for the rest of us? I guess we should all buckle up to see what's coming. So how do you feel about Silicon Valley Bank's collapse event?